here we go. Attitude law number 4. Have a clear idea of investment returns desired. The intelligent investor will have a clear idea of the investment returns he or she wants to see over a long period of time and the risks of seeking higher returns in the short run. A. The idea you must take high risks to get high returns is a banker's myth, used to get you interested and then locked into risky investments, for it is easier to downplay risk than to erase your desire for high returns. B. You must first seek investments with excellent long-term prospects and know a little downside risk. This will favor you, A, in the tax area, and B, by using compound interest effects, which again in turn will, in the interim, not be affected by taxes. My dear Clement, let's start with the latter one. Why is an excellent long-term prospect with a little downside risk favorable in terms of taxes? That's very simple. The standard taxation laws that we have when you own an investment is that you're taxed at the point of exit, so to speak. Plus the dividends will be taxed, but that's a standard thing. So let's look at the point of exit. Basically, when you sell, when you move anything into another investment vehicle, like bringing it from your personal investment into a company, that's usually where the government says, I tax you on your profits. So that in itself favors already those investments that you keep for a very, very long time. Sometimes in real estate in Germany, for example, if you hold it long enough and you're clever and do not fall prey to some minefields in a thing, you can even sell tax-free after a certain amount of time. Now, therefore, it's always better to look for something that you can hold on for a long time. Shy away from everything where they say, well, in 1 year you'll be this. We talked about what returns you can expect. If people tell you there's a 100% return in 1 year, I told you. Whereas the question here is, why don't you go to a bank and get leverage and buy as much of that investment yourself and don't tell anyone? Because why would anyone say that to anyone else if there's not a hidden problem in it? So always look for long-term, rational investments according to a very clear plan, and try to keep on to it as long as you can. Secondly, the high risk, high return. People always think high risk, high return. And that happens sometimes. True. The problem is this: you only see the cases where it works well. You do not see the cases where people fell off because people don't want to talk about it. There's a very famous phenomenon. That's actually why lots of frauds go undiscovered, because people are too ashamed to talk about it. Who would tell you, oh my God, I made this investment, what a bullshit I made there? They won't, because nobody wants to tell people, oh, I'm so stupid. It takes a lot of guts to say, man, I made a big mistake here in investing. Nobody wants to talk about that. That's why people are still talking about how much money they made in certain investments in the last 3 years. Talk again about blockchain, Bitcoin, and what was it, FTX and all that stuff. They talk about how much money they made. They never tell you. It's very hard to find and pinpoint a person who really lost money on it. But obviously people lost. That we can see from the graphics. Anyway, make sure that you find something that you're very comfortable to hold on for a very long time. In the process of investing, you will see why it's a very favorable approach. So, high risk, high return, forget that. You can find very, not high, but very reasonable according to the standards we have set up, returns with very little or almost no risk. And be aware of one thing: just because you do not know what something is worth 3 years or 5 years from now does not mean it's not a high return. High returns are always when you exit, Or when at one point you realize, oh my God, I'm not even exiting, but everybody is telling me how much that is worth. There can be a stock exchange, or you just know that a building that you own somewhere, for example, has gone up in price. Then you know, I did well. That's an important thing. So we talked about what investment returns according to the time you invest, the time you invest in investing, double investment. You spend, you can expect. And then find things that are low risk, or according to your plan, no risk, and keep on to it for a very long time. I hope this helps you. You're wonderful. Yeah.